I also wanted to talk about the valuations. I had spoke with a member of our investment community that manages a fund, and he was sharing some of the information he had on these companies, and he owned all three. And he was kind enough to share with me the analyst expectations that he had for these companies for 2024. Take analyst expectations with a grain of salt, but it just sort of points to what people are expecting. So this is from mid-January, so prices change day to day. But just to give you a general direction, he shared a multiple of 36 on 2024 earnings for Constellation, a multiple of 32 for Topicus, and then 32 for Lumine as well. So the market seems to be putting a bit of a premium on Constellation. They're probably much more well-known, and a lot more investors probably know about them. And it seems a little bit counterintuitive given Constellation's size that they would be trading at a higher multiple. So maybe you could just share your thoughts on their current valuations in light of everything we've talked about, in light of the quality, the management teams, and such.
Well, I mean, taking those numbers at face value is 36 and 32. To me, that's kind of in the realm of, the error, rounding error. So I don't know that would be that much different. I mean, I also think that if you're a long-term investor in these, then, the exact multiple maybe will fade in importance a little bit. And the way I think about it is I always think about things that kind of like 10-year commitments, you look out. And, the basic math of it is if it's 25%, let's just say if it's 25% CAGR over 10 years, that's 9x. Think about that, 9x. So suddenly, and it doesn't have to be that number, make it, if it's 20%, I think it's 6 something. So, suddenly, whether it's trading for 25 or 30 or 35 kind of doesn't take on as much. If you knew it was going to be 9 times higher, or let's say earnings were going to be 9 times higher 10 years from now, then I think you're not so much worried about whether you're paying 32 or 35 or 29. So that's the frame of reference. Obviously, you can't pay 50. You can't pay crazy multiples, but you have more room than you think with some of these. And then even so, if you wait, you almost always get chances. I mean, we talked about it. I mean, Lumine briefly hit, got down to 17 handle in, I think it was October, and it finished the year over 30. So that's dramatic. You might not get quite that swing, but for all these companies, you're going to get some chances. So there's two different ways. I always say, like, if you love a company, you've done all the work, and for me, the hurdle rates are high for me to find something. So if I find something, I'll start small, even if it's trading at 31 or 32, 35, and then you can always build it up, but up later. But the problem is, if you wait too much, sometimes it might go a year or two before you really get a shot, and then you would have been better off just buying it when you first wanted to buy it. So I don't get too, I don't put too fine of a point on, what the multiple is to that extent. The way I think about it is just a very simple model of, they have so much capital today, they're earning a return on that capital. You forecast that out, how much are they going to reinvest of what they make, and you kind of, you get a number 10 years out, put a multiple on that. What's your IR? So you've got quite a bit of room to play around with those variables and adjust them along the way. But I think these are pretty attractive to own over a 10-year period of time.